Palantir stock has been sliding, and one well-known short seller believes that even a $40 price tag would be more than fair. Andrew Left, the founder of Citron Research, argues that investors have overhyped Palantir's stock, while its true value looks small compared to a real artificial intelligence leader like OpenAI. Although I do not agree with Left's point of view, it is important for investors to pay attention to these bearish predictions because they reveal how little some critics understand about Palantir's actual potential. Even though Palantir Technologies has been one of the strongest artificial intelligence performers in 2025, there are concerns that investors might be ahead of reality. Some critics argue that Palantir is riding on hype rather than substance, while supporters insist that the firm's unique government ties and advanced software offerings put it in a category of its own. Palantir Technologies has been one of the standout winners in the artificial intelligence space during 2025. The company's software platforms, particularly its artificial intelligence platform, have caught the attention of both the government agencies and private businesses looking to implement advanced data-driven solutions. This growing demand has contributed to a remarkable surge in its stock. However, Andrew Left believes that the excitement has carried investors too far ahead of the fundamentals. He appeared on Fox Business last Wednesday and stated very directly that Palantir's valuation had become completely disconnected from a financial reality. On the following Monday, he doubled down by calling Palantir a company that is now detached from any serious financial analysis. These remarks were meant to warn investors that they might be paying far too much for Palantir's growth story. The stock's recent performance certainly demonstrates why opinions are so strong on both sides. Since the start of the year, Palantir has skyrocketed by 130%, making it the single best performer in the Standard & Poor's 500 index for 2025. To put that in perspective, few companies in history have managed to outperform the rest of the market so dramatically in such a short time. Yet the numbers that underpin this rise reveal why Left is sounding the alarm. Palantir currently carries a price-to-earnings ratio of 588 times based on the last 12 months of earnings data provided by FactSet. To make sense of that number, it is helpful to compare it with Nvidia, another company that has become a household name in artificial intelligence. Nvidia is trading at around 58 times earnings. Supporters of Palantir argue that this sky-high valuation can be justified. They point to the company's track record of securing exclusive government contracts, which few other technology companies can claim. These contracts provide revenue stability and also signal that Palantir's software is trusted at the highest levels of national security. Furthermore, Palantir's artificial intelligence platform is viewed as one of the most sophisticated tools available for organizations trying to make sense of massive datasets and apply machine learning to real-world challenges. Nevertheless, the market has recently shown signs of hesitation. After closing at an all-time high of $186.97 on August 12th, the stock has dropped by 6.9% in the past week. Since Left's appearance on Fox Business, Palantir shares have also lost 5.6%, closing at $174.03 on Monday. The decline shows that investors are beginning to reassess just how much optimism is baked into Palantir's stock price. In a note released on Monday, he explained that if Palantir were priced at the same sales multiple as OpenAI, its share price would collapse by about 77%. To understand why, it helps to look at OpenAI's latest financial moves. CNBC confirmed last Friday that OpenAI is preparing a secondary sale of $6 billion in stock, which would give it a $500 billion valuation. Meanwhile, Bloomberg has reported that OpenAI expects to generate $29.4 billion in revenue by 2026. When you divide that valuation by the expected revenue, you get a forward sales multiple of about 17 times. Now let us compare that with Palantir. According to FactSet estimates, Palantir is expected to deliver $5.6 billion in revenue by 2026. If you apply the same 17 times forward sales multiple that OpenAI currently commands, Palantir's share price would work out to roughly $40. Andrew Left argues that even this outcome would be generous. He emphasizes that OpenAI's valuation multiple is already the highest in the world among large software-as-a-service companies, and many analysts already view that multiple as extreme. In his opinion, Palantir would still look expensive even if it fell to that level. Left also makes the case that Palantir's business model is not as scalable as OpenAI's. OpenAI relies on a subscription-based approach that can be expanded to millions of users quickly and efficiently. Palantir, by contrast, generates much of its revenue from large contracts, particularly government contracts, which can be lumpier, more irregular, and harder to grow at the same pace. This contract-heavy model makes it difficult for Palantir to achieve the kind of explosive growth that a subscription-based company like OpenAI might be able to sustain. On top of that, Palantir faces intense competition from major players such as Microsoft and Databricks, both of which are investing heavily in artificial intelligence platforms and cloud-based solutions. This competitive pressure could limit Palantir's ability to expand its market share in the long run. At the same time, Andrew Left did acknowledge one important point. Even if Palantir is severely overvalued according to traditional financial metrics, its stock could continue to climb in the near future. As he explained, markets are not always rational in the short term. There is an old saying that markets can remain irrational longer than any single investor can remain solvent, and this applies here as well. Momentum, hype, and investor enthusiasm can sometimes carry a stock much higher than logic would suggest. However, if his predictions are accurate, the long-term picture for Palantir could involve a steep correction, which would mean significant losses for anyone buying at current levels. In conclusion, the debate around Palantir reflects the broader tension in the market right now between excitement for artificial intelligence and the reality of financial fundamentals. On one hand, Palantir's rise in 2025 has been nothing short of remarkable, fueled by optimism about its artificial intelligence platform and its government partnerships. On the other hand, critics like Andrew Left are urging caution, pointing to extreme valuations, tough competition, and the difficulty of scaling a contract-based model. Investors must decide for themselves whether Palantir deserves its premium or whether the stock could be setting up for a painful correction. For more stock news updates, with that being said, I will see you in the next video.